Okay, so for this next video lecture, so we are still under the substantive procedures to audit asset accounts. So the second account is our receivable account. Okay, so here are the following substantive procedures that the auditor will perform to audit our receivable balances. Okay, first is to confirm the accounts and notes receivable by using the direct communication with the debtors, that is to verify the existence and the gross value of such account. So again, in this case, the auditor will do the external confirmation where he will send the request to the respective customers and the other debtors, okay, to verify the existence of their accounts, okay, which are recorded in the books of the entity. So this again will, or the responses of these suppliers or debtors will be sent directly to the auditor. Okay, so confirmation of accounts receivable is considered to be a generally accepted auditing procedure. Okay, that is why this is included in the list of the substantive procedures to audit our receivable account. The auditor are to confirm receivables unless, so these are the instances where the auditor may not confirm, okay, the balances of the accounts receivable. First, if the accounts receivable balance is immaterial. So, of course, in audit, the material amounts are those which the auditor will only have the concern, okay, which will have the material effect on misstating the financial statements. So, therefore, if the amount is immaterial, then the auditor may disregard such uh, account. Another is confirmation would be ineffective. Of course, if the auditor, based on his professional judgment, thinks that having or performing confirmation would be ineffective, then he will not do it anyway. Okay? Or if the risk of material misstatement is low, this is the same with the amount is immaterial. So in this case, if the assessed level of material misstatement is low, meaning the auditor can have less audit evidence to support his opinion. Okay. Receivable confirmation also, this primarily tests the existence and rights assertion of the entity. Meaning, the auditor will determine if such amount really exists based on the confirmation by the credit debtors and um, customers. Okay, so meaning if they confirm that there is such an amount that they owe to the entity, then it will prove the existence of the account as well as the right, meaning the entity has the right to collect it from the debtors. Okay. Investigations on the replies also from the receivable confirmation can exist or can assist the auditor to detect lapping. Okay, what is lapping? So, lapping is a form of embezzlement scheme in which the cash collections from customers are being stolen by the employee who has the custody of the collection of cash, and the shortage for such stolen amount is concealed because in this case, the employee may also be the one who is recording the cash transactions. So there is no segregation of duties. So he may delay the recording of such cash receipts or collection. So this is what we call lapping. Okay. So in the confirmation, the auditor will determine the existence of the amount probably of the account balance of the customer. So if, for example, what is written in the request is higher than what the customer owes, then probably lapping exists. Okay, so this confirmation procedure also will help the auditor to detect lapping. Okay. Another substantive procedure for auditing our accounts receivable is the auditor to review cut-off of sales and cash receipts, okay, at year-end, to verify the transactions which affects our receivables, that the entity, okay, should only record those transactions which pertain to the current period, and they should not record those transactions which do not pertain or included in the current accounting period. Okay, so a sale is properly recorded. Okay, so when do a sale, when can we say a sale transaction has been perfected? Okay, so this is when the title passes, okay, from the seller to the buyer, okay, once the item is sold. So this is our determining point, the transfer, okay, of the title. So this is when the entity should record the sale. Okay, so title passes for items sold, for example, under FOB shipping point. So when does the title of the goods transfer to the customer? This is when the item is shipped. Okay, so once the inventory reach the shipping point, that is when the transaction of sale is completed or perfected. So in this case, the entity can now record sales. Okay, this is for FOB shipping point. What about for FOB destination? So the sale can only be recorded and the title is considered to pass, okay, or transfer to the buyer once the item or the inventory is received by the purchaser or the buyer. Okay, so please, this is very important because the auditor will determine who is still the owner of such inventory if that inventory is in transit, especially. Okay, so aside from those we have mentioned, so there are other audit procedures also pertains to that pertains to receivable which the auditor could perform. Okay, the first is the auditor will prepare an aging of accounts receivable schedule. So this is to test the adequacy of the allowance for doubtful accounts. So in the aging of accounts receivable, this is where the auditor can see the balances of the customer which have been outstanding for a long period of time already, and what do the entity do, okay, about it, okay, to collect such amount, or if this amount are uncollectible already or to be considered as bad debts, okay, and should be transferred to an expense account, so the accounts receivable will be write off properly. Another is the auditor can also perform analytical procedures for accounts receivable. So he will corroborate the data from sales, note receivable, and interest revenue, which are also the accounts related to accounts receivable, together with other non-financial data, which supports the transaction. Okay. Another is the auditor could also review disclosures for compliance with the applicable financial reporting framework if the entity does follow, okay, such disclosures required for this account. Another is the entity or the auditor, can inquire of the management about pledging or discounting of their receivables. This procedure is done to verify if appropriate disclosure is provided for. Okay, because in this case, pledging and discounting of receivable may result into deducting a part of that amount which is pledged or discounted. Okay, so in this case, the entity will no longer have the right to collect such, or if they collect such amount, it will be paid to the creditor where they pledge or discounted such receivables. Okay, another is the auditor can also review the loan agreements for pledging and of the factoring of the receivables. So this procedure is done to verify if appropriate disclosure also is provided for. Okay, so this is very important. Another is to inspect notes on hand and confirm those not on hand by direct communications with the holders, because this might result into overstatement of the receivable. Okay, especially if the entity do not have the right to collect from such uh, notes or receivables. Another is to vouch receivables to supporting customers. Further, supporting customer orders, sales order invoice, shipping documents, and credit memos to verify the existence of the accounts and occurrence also of the occurrence and accuracy, I mean, of the sales transaction. Okay, as we have discussed before about vouching, this is where the auditor will start auditing the account balance from the record, and then he has to confirm this record of transaction to the supporting documents. Okay, so if indeed the recorded amount has occurred and existed, okay, or has been authorized as well, that is vouching. Okay, another is the auditor can also inquire of about the factoring and factoring that the client maintains. Okay, so here, uh, if the auditor will determine if the entity has the right to those account. Okay, so again, aside from reviewing of the disclosure, he can also have some confirmation, okay, about um, the rights, okay, for those respective account balance. Another is the auditor can also put the accounts and notes receivable subsidiary ledgers to verify its accuracy, okay, in terms of the balances of the receivables. Another is the auditor will reconcile subsidiary ledgers also to the general ledger control accounts to verify if the amounts forwarded are free from clerical errors, and meaning if they are also correctly posted. Okay, the balances are correctly posted. Another substantive procedure is the auditor can examine the cash receipts subsequent to year end. The purpose of this is to test the adequacy of the allowance for doubtful accounts and also to determine if that is appropriately valued. Okay, because in this case, collections will determine if a particular customer or account is delinquent or is to be written off, okay, depending on the schedule of the accounts receivable. Another is that the auditor can also discuss the adequacy of the allowance for doubtful accounts with the management and the credit department as well. And then the auditor will compare it to the historical or to the entity's historical experience to verify if that the account is properly valued. Okay, since allowance for doubtful accounts is an estimate, accounting estimate, so here the auditor should make sure that the estimate used by the entity is the basis of this estimate is reliable also, or based on their past experience. And lastly, the auditor should consider changes in the economy or the company's customers that might affect the valuation of the accounts receivable. Okay, so this is an analytical procedure which is paired with substantive procedure to determine the accuracy as well as the estimates of the allowance for doubtful accounts for the entity, okay, in terms of the environment in where the entity is operating, and if that estimate is also close to the other competitors in the same industry as well. Okay, so those are the substantive procedures, okay, that the auditor will perform in auditing the accounts receivable balance count.